The global financial crisis hasn't stopped Australia's jobs market from growing at a cracking pace. More than 40,000 jobs were created in June, leaving Australia with an unemployment rate of 5.1%, one of the lowest in the developed world. It came as the IMF upgraded its global growth forecast despite the growing risk posed by Europe's debt problems. But the good news also makes the Reserve Bank's tasks of managing inflation and interest rates more difficult. Here's Philip Lasker.
Today's stronger-than-expected numbers had some predicting a return to the pre-GFC jobs boom.
Over the medium term, there's every possibility that the unemployment rate heads back down to that 4% level. We don't think it's happening anytime soon. And what we are seeing as well is rising participation, which is normal in a healthy and strong labour market. I think that will continue and that will temper the pace of the decline in the unemployment rate, but we are still likely to get a little below 5% by year end.
Right now, unemployment stands at a 17-month low of 5.1%. The number of part-time jobs created during the month was almost double full-time, but the overall result was 3 times stronger than expected. It was a timely release for Employment Minister Simon Crean, who attended a jobs expo in Geelong.
This is a very great outcome for Australia. Job growth of 2.9% coming out of the global financial crisis. Australia has recorded over that time the fastest job growth of any advanced major economy.
We've created 350,000 additional jobs over the past year. That is a very good outcome for the Australian economy in what has been very difficult circumstances elsewhere.
And while the bulk of it was part-time employment, it's pretty impressive that full-time jobs managed to put in a near 20,000 gain after some very strong increases in previous months.
The mining tax debate didn't prevent unemployment falling in the resource-rich Queensland, Northern Territory and Western Australia, where the jobless rate is also at a 17-month low of 4%. Unemployment was steady elsewhere on the east coast, while it rose in Tasmania and South Australia.
We are now the equal lowest unemployment rate of any advanced major economy in the world.
And if the IMF is correct, unemployment will be going a lot lower. In its latest World Economic Outlook, the IMF upgraded its world growth forecast for 2010 from 4.2 to 4.6%. which augurs well for Australia's resources trade. The IMF maintained its 3% growth forecast for Australia, saying the domestic economy would be fuelled by robust commodity prices. But all this good news is problematic for the Reserve Bank because it points to inflation. Perceptions have changed slightly, and analysts are now less certain about whether the Reserve Bank is content to sit on its hands for the next few months.
What we need to still see in the coming weeks for the RBA to be comfortable in lifting rates in August is probably another high CPI print later this month for Q2 and some stability in global financial markets. I think that's quite key.
The job numbers saw the Australian dollar and interest rates shoot up on financial markets, a response to a strong economy and expected higher rates.